All right. All right. Happy Friday, Melonheads.
All right.
What's going on, you Melonheads? Finally, a meh kind of day in markets. I think we deserve that one. It's been a little bit of a
After the
nutty
last
week.
4 days, we really deserve a nice man day.
Yeah, you think? We did a live stream every day this week, Mish. Every day. Spontaneous Monday. Tuesday morning, regularly scheduled. We had Powell's press conference on Wednesday. We did a spontaneous one yesterday because of the market crash. And now here we are again, our regularly scheduled Friday. It's been a nutty week.
Yeah.
Wow. Anyways, not a lot going on in markets today, thank God. I think we're all entitled to a calm day before we go into this extended weekend. Markets will be closed on Monday for the Juneteenth holiday. So a lot can happen over a 3-day weekend, though, can it?
It can. And I think the first thing we really need to talk about is what's going on over in Electron Land.
Electron land. Are we talking about crypto? Is that what we're saying?
A little bit of crypto action.
Because crypto doesn't take the day off. No days off for crypto.
No days off.
I'm not going to rehash the whole video, guys, but I just did a video a few hours ago. When the stream's over, I recommend you go out and check that out, about how one by one these DeFi platforms, they're halting withdrawals, which, halting withdrawals is like the last desperate move of a company that's about to go bankrupt. We've seen this before. And really, I'll summarize the video very briefly. Cryptocurrency it's functioning right now like an extension of the debt market because of all these DeFi platforms, these lending platforms where people deposit their cryptocurrency on their platform in exchange for these ungodly high returns and high yields. And real quick refresher, what do we say on this channel when somebody promises you a risk-free 15% return? Anybody?
Doesn't pass the sniff test.
He got it wrong 2 days in a row.
Ah!
Run away.
Oh, run.
It's 2 days in a row,
It still doesn't pass the
Mish.
sniff test.
Trying to.
It still doesn't pass the sniff test.
Yes, that's correct. It doesn't pass the sniff test. We also say that too. But run. Do not walk for the nearest exit. There's no such thing as a risk-free 15% return. And I've been saying it because every time I did a video on Bitcoin on this channel, really since it started, we're coming up on 1 year now for this channel. Every time I did a video on Bitcoin, somebody would say, hey, you should stake your Bitcoin on this platform, or you should put your Bitcoin in the BlockFi or wherever and earn 15, 20%. And every time I said, I don't trust DeFi apps. I don't trust them. The yields are too high. Not when they can go to the bank. If they were really low risk or no risk, they could go to a bank and borrow money for 4.5%, 5%. Why are they paying us 15% for our money? Because they're putting that money in.
Anytime you feel like you got to get high pressure to do something, there's always something wrong in my book.
Yeah, and to use your phrase or repeating me, it didn't pass the sniff test, so I never did that. I never went in those DeFi apps, and if you went into some of these DeFi apps, if you went there chasing 15% yield, you ended up with 100% loss. So, capital preservation of principal comes first, then yield.
So what are we up to now? We have Terra, Luna, Celsius. Binance is warned.
Yeah.
Is there someone else?
Binance briefly halted withdrawals, but they brought them back. So we're not going to count Binance. But now we've got Babel, which, by the way, how about the irony of naming your DeFi platform after a structure famous for collapsing?
Yeah, exactly.
A little foreshadowing there. A little bit of irony, maybe. I just throw them out there.
Vacation's right. The Luna effect has been contagious, and I don't know if it's necessary that Luna is contagious or they're more of a symptom.
I think Luna there's contagion. I don't know if Luna is really what started it. Crypto winter was going to happen no matter what. It's part of this Bitcoin cycle. This is the third time now that we've seen that. And it happened back in 2013, 2014 with the Mt. Gox hack and the collapse after the first big bull run and the first Bitcoin halving. Then it happened again 2017, 2018. We had OneCoin and the BitConnect schemes, and they failed. But again, you get this natural Bitcoin cycle where the halvings cause a little bit of less Bitcoin to be entering circulation. It's deflationary. So sends the price up a little bit. A couple of people notice, they start buying in, the price goes up a little bit more. Next thing you know, you got a FOMO rally on your hands, and people are just piling in. And then along come the scam artists who trick people into piling in at these ungodly high prices. They promise them you're going to get rich quick. They usually target the poor. And then one by one, eventually the FOMO wears off. The price goes too far, too fast. The rally fails. It starts coming down. And then one by one, these scams start failing. And as the scams fail, it creates a stampede for the exit. And this is the third time it's happened. I think Tether will be the big one this time. I think that's the end game here. And, Tether's down. Their market cap was broke below 70 billion today, down from 87.
Right. It's been sitting. So that's 20 billion down in the last month.
Yep. So far, they've been able to meet these redemptions. It's important to notice that. So far, everybody who's gone to redeem a Tether has gotten their dollar back. But you never know. The next guy could be the last, right? Or there could be another 10, 20 billion. Or for all we know, Tether has all 70 billion or 69.8, whatever they have left. For all we know, Tether has it all. We don't know because they won't release an audit. Nope.
Yeah, you're right. It could be the next one, the last one, or another billion.
Yep.
All right. So I see Sage is in the chat now, and Cheeseburger. Is that a little better on the sound?
What's up, Sage? What's up, Cheese? How you guys doing? All right. What do you say we? I think it's time to shrink the melons here. Let's get rid of the logo. Let's remove you. I'm sure everybody has already liked and subscribed and shared this video. Let's take a walk through the indexes right now. S&P is up 20 on the day, well off its highs, fighting to stay in positive territory, about 0.6%. The Dow is up 88, or about 0.3%, faring a little bit worse than the S&P. And the NASDAQ, as I would always say, does not pass the sniff test. The NASDAQ is the high one today, up 1.7%, or 183 points. And the NASDAQ should be the low, right? In this market environment, as debt comes unwound, as rates are hiking, the NASDAQ should be the one underperforming. Anytime you get the NASDAQ outperforming the other indexes in this environment, something is off. Okay, and we see the same thing with bond yields. Looking at U.S. government yields right now, let me zoom in a little bit on this so you guys can see better. Pretty much across the board, only a couple of the yields are up today, but the big one, the 10-year, is down 6 basis points. We're at 3.24 on the 10-year. Right, we're down like 25 basis points from 3 days ago. Who's buying all these bonds? I don't know where this money's coming from. If you watch Manarino's saying the Fed is buying right now. I don't know what to believe.
I had a problem with that because we don't see where that money's coming from. Any other time you can sit there and look at it and go, okay, it's coming from here to here, because you can watch this sell off and it go from here to there. I just don't see the money movement this time that can say it's coming from specifically this area going to this area.
Yeah. Well, it's not showing on the Fed's balance sheet. Now, the Fed's balance sheet was up like 15 billion this week on their Wednesday snapshots that they report. But the Fed balance sheet has a natural sine wave tendency to it. It goes up and down on a weekly basis. And right now it's still trending down, even though it was up today or up this week. So if it is central banks that are somehow buying these bonds right now, they're being sneaky about it. Now, we had the European Central Bank had their emergency meeting about their emergency tools, i.e. turning on the money printers again, that they did. So, maybe this is central banks. I don't know. I'm going to stop short of saying it's the plunge protection team, it's the central banks. It could be. And I tell you what, if that's who it is, it's going to start showing in the inflation numbers. Because if they're pumping money in, they won't be able to hide it in this inflationary environment. But 25 basis points on the 10-year in 2 or 3 days, that's a big drop in yield. That's a lot of money went into the bond market, and not a lot of people have that kind of weight to throw around. But real quick, I got to send a shout-out to Mr. AK. Thank you, sir, for your super chat. I appreciate that very much. AK says, bought call options, S&P 4,600 market level to hit 2,000 by 15 April 2023. Now it costs 4 times what I paid. Can't remember what I paid. 4,600. was what the S&P was when I bought that call option. The S&P was at 4,600 when you bought it, and you're saying now it's 4 times as high, even though the S&P is down at 3,600. Something here doesn't add up.
I don't think that's a call option.
Bought calls at 4,600. Were they S&P or were they short S&P calls? Did you buy S&P puts? I don't 4,600 S&P calls should not be worth 4 times what you paid for them now. Unless you bought them, I don't know, yesterday. Anyways, I'm sorry, I'm having a hard time getting through the numbers here right now, AK, but thank you very much, sir, for the support of the channel.
Yeah, AK, if you can explain that a little more, I think we got a better shot at it.
April
Cheeseburger did put one in.
Oh, hey, Cheeseburger. What do we got, Cheese? He says they're buying off the books, maybe, hidden ledgers. If that's what they're doing, Cheese, number one, that would be incredibly, incredibly sleazy. I mean, understand how monumentally sleazy that would be if they're buying these in some kind of hidden ledger right now, while they're telling us they're net sellers, while they're telling us, because according to the Fed's statements yesterday or on the 15th, they should have unwound their first assets, right? And interestingly enough, yields have only gone down since Wednesday. So, my God, let's just hope that's not what they're doing, Cheeseburger. I really sincerely hope that is not the case. Because if they are that deceitful, if they're that openly, blatantly dishonest, then who knows what they'll do? I don't want to believe that. I really don't. But not many people have enough money to move markets that much in the U.S. 10-year Treasury. I don't know. They've got that plunge protection team out there. I hear a lot about it. Don't know a lot about the markets, the mechanics of it. And I got Mr. Harry Dan 2. What's up, Harry Dan 2? He says for AK, it could be that it's IV that has pumped. He's talking about implied volatility, which informs the price of call options. That could be. I'm still having trouble with the numbers in that one. All right. So we looked at the indexes. Another thing I want to talk about, we looked at the bonds. Check out commodities. Big bag of suck in commodities right now. Everything's down. Gold down 0.5%. Silver down 1.4%. How? We got markets are higher, led by the NASDAQ. People are buying bonds, sending yields lower, and they're selling gold and silver right now? Is that what's going on in this market right now? Who's doing this? Who's doing this with their money? Selling gold and silver to buy the NASDAQ and bonds. What human being?
I think as much as yesterday made sense, today doesn't.
No, this makes no sense. What's going on in markets today? But I tell you, there is one variable that would make this make sense. And it's along the lines of what Cheeseburger said, and I don't want to believe it, that it's the Fed doing this with a secret ledger. I don't want to believe it. But you know, Manarino says the same thing. He says he thinks it's the Fed doing it. And he's been doing this a lot longer than me. All right. But, man, come on back up here. Look at this. Copper's down. Metals are down. Crude oil. What in God's green earth? Crude oil down $8.48 today. 7.2%. Check out this crude chart. Look at this is a 1-month chart of crude oil. Look what it's done since the 14th, since Tuesday. We were at 122, as high as 123.50. Now down at 110. We traded as low as 108 today. So how does oil dump almost $20 in 2 days? This is the market is pricing in.
Well, between the crude oil, can you bring up RBOB too?
RBOB gasoline, as a matter of fact, I have that right here.
Yeah, imagine that.
RBOB peaked on the 10th of June at 432. Now down as low as 389 today. Are there more refineries coming online? No. This is the market is pricing in a recession. It's the only thing I can think of to make sense out of this. The market is saying
that's the only thing that
big time recession.
Yeah, the only thing I can think is this demand destruction is finally getting priced in now, and we're starting to see the come down in this because we have 11 straight weeks of inventory of gasoline going down negative. There's no reason that we should have a 50-cent sell-off.
Yep. And it's especially not considering what's happening with Libyan oil right now. All these projections about oil prices going higher, they were all based on peak oil output. We don't have peak output, not even close.
No.
So, yeah, again, doesn't pass the sniff test. Who's dumping oil futures right now? Who's cashing out? This reeks of intervention.
Right. So it does. And I was wondering, is this people getting ready for possible weekend intervention over margins? What is going on here?
Real quick, I got Vacation Time 247. Thank you very much, Vacation, for the super chat, sir. He said, Could you both give us an early prediction for the Fed's next rate hike? 1/2, 75, or 1% or more? Also, CPI read for next month. Hit the like, y'all. Well, thank you for squeezing that hit the like, y'all in there. So just if I had to base, let me work backwards, and then that'll inform my Fed rate hike. My best guess for CPI next month is going to be that it comes down. Certainly because of what energy has done over the last couple of days. All right. Although we're looking at energy over 1 month, where right now we're actually a little bit lower than we started the month. So yeah, energy's coming down, and energy has been the big one that's been driving these higher inflation numbers. The other thing is autos. The base effect in autos is really starting to bring those automotive inflation numbers down. So I'm going to say a lower CPI. If we were 8.6 last month, I'll say, 8.3 without looking that closely at the math. I think we get lower CPI, but not much lower CPI. What will the Fed do with that? I'll probably stick with another 75 from the Fed unless we get significantly lower on the CPI. So I'll say 8.3 and 75 basis points. What do you think, Mish?
Well, I think it's going to be worse than that. I think we're going to see somewhere between a 7.9 to an 8.1 on the CPI. And then what we're going to see on the Fed is they're going to waffle and see that CPI is coming down, and they're going to come off of it and say they're going to do a 50. That is one scenario. And that's if the gas stays where we're at, because food prices will follow gas prices at this point, because gas is so high right now. That's actually going to push food prices. So if gas stays or levels off where we're at right now, I think we're going to do a 7.9 to 8.1 with a 50-point raise. If gas comes back up, I think we're going to stay flat at 8.6 and go to 100 points. Because if you look at the progression, we're due 100 points.
All right. Little non-committal there, Mish. Give me numbers. What's your CPI number?
All right.
No
CPI is 8.1.
No Boolean code here. Give me a number.
All right. No Boolean codes. No and/ors. 8.1 with a 0.5.
8.1 and 50 bips. There you go. All right. So you're a little bit lower than me on both, but we're both in the same ballpark here. I got 8.3 and 75 bips. So thank you very much, Vacation Time. Appreciate that. And thank you for the hit the like button mentioned in there as well. Appreciate it very much. I got Mr. Mike Kathman. What's going on, Mike? He says, just wondering your thoughts about the sovereign debt crisis starting to show itself again. All right. So the sovereign debt crisis, that was in, around 2015 that hit its peak with the PIGS countries unable to finance their government deficits and service their debt. It was led by Greece. Greece got all the headline, but it was really the PIGS countries, Portugal, Italy, Ireland, Greece, and Spain. And that is starting to rear its ugly head again. And what you have right now is the European Central Bank is committing to propping up those governments, that they won't let those governments' borrowing costs get too high out of control. Because right now, no private citizen, no private entity wants to buy that debt. Now, what does that tell you? That tells you that debt is worthless, that The average person doesn't have any confidence in that government's ability to pay it back. So the only way to make that work, if you're the European Union and you're trying to hold all these countries together, is for the European Central Bank to print euros and buy up that debt in order to suppress its yield. Just basically price fixing, right? It's price controls for money, right? It's the European Central Bank interfering with the free market setting the cost of money in those countries. And price controls, I say all the time, price controls don't work. They always cause problems. They either lead to shortages or, breakage in the means of production, or in this case, runaway inflation is what it's going to lead to. Right? The European Central Bank.
Do we want to talk about that the law they just got through the House?
Are we talking about here in the States, that law?
Yes, sir.
We'll get to that one when we get back on the energy. But for right now, talking about the sovereign debt crisis, there was another interesting dynamic in play this week. The Bank of Switzerland, or the Swiss National Bank, whatever the central bank in Switzerland is called, they raised interest rates. And the Bank of England raised interest rates, while the European Central Bank came out and said, essentially, we're going to start QE again. So you've got a little bit of a push-pull going on in Europe right now. You've got the non-EU countries, right? Switzerland's neutral. They're not part of the EU, although they're like right in the middle of the EU, but they're not official members, right? They still use their own currency. And you've got England that uses their own currency. And they're tightening. They're increasing the value of their currencies while Europe is loosening more. So it's going to be interesting to see how that plays out, because say you're a European citizen and say you have debt denominated in British pounds, or you have debt denominated in Swiss francs, but you get paid in euros. You just got screwed, because the currency you owe is getting stronger while the currency you earn is getting weaker. Vice versa, if you owe euros, you earn francs, or you earn the sterling, and you're making out like a bandit right now. So you've got the central banks in Europe. You've got the European Central Bank and then these other non-EU central banks. They're like two parents arguing in front of their kids right now. Half of them are going to get screwed, half of them aren't. And it's going to be interesting to watch that play out. I don't know that the European Union is just going to sit back and take it, or are they going to start getting punitive towards the Swiss and even more punitive towards the Brits than they've already been. Certainly they've been very punitive towards the Brits after Brexit. But that's interesting how that's playing out right now. And I found it very curious that the Swiss National Bank hiked right after the EU came out with that announcement. That flies in the face of what Lagarde is trying to do. But thank you very much, Mike. I appreciate the super chat. Man, I can't keep up with these guys today. Cheeseburger, thank you, sir, very much. He says it's referred to as a cartel for a reason, dude. You need to get the audiobook version of The Creature from Jekyll Island. I have my issues with audiobooks. It just feels like cheating to me. I know I should do it, but it just feels like cheating. Maybe do a reaction video. The Creature from Jekyll Island is on my list. It's very high on my list. But, man, I got books that I bought that I haven't even read yet. I spend all my day reading charts and reading stories for you guys. If I have extra time on the weekends, I get another video made, man. It's tough to sit down and read it. I really need to. Because I hear very good things about The Creature from Jekyll Island. But thank you, sir. I appreciate the support of the channel as always. AK is back. Thank you, AK. You didn't have to do that. You could have. Well, thank you very much. He says the S&P was at 4,600 at the time. I sorted.
He put options.
Okay, he bought puts. Okay, so yeah, you shorted the S&P. Then that makes sense now. Now that you bought puts, to go down to 2,000 by April 15th, 2023. Now to buy that option, it costs 4 times as much. Is that better too, or is it better?
Forex some puts.
Yeah, that's much better to understand. Yeah, so yeah. You did a 4x on your investment already. And you've still got, what, a year and a half? A little less than a year on that chart. So you're doing all right. All right. So let me throw the whole thing out by saying not a financial advisor, not financial advice. Do your own research, your own DD. Arrive at a decision right for you. Right now you're sitting pretty. You made a really nice return. Remember, the one thing that could sink your trade right now is the Fed turning on the money printers. All right. I think that's the only thing that could sink that trade that you have in place, AK. It's a good trade, I think, and obviously you're doing well right now. If the Fed turns on the money printers and they pivot, like we all know they're going to do eventually, then stocks are going to go parabolic again. The easy money is going to flood in and inflate the asset bubble even further. All right, so keep that in mind, especially right now where we have, like I mentioned, Manarino is saying the Fed is secretly buying right now, and we have these seemingly inexplicable drops going on in the 10-year Treasury yield right now. So we may be in the early innings of that pivot already. So just something to consider, right? That's the one thing that could possibly sink that trade. We may be in the beginnings of that right now. So let me just say what I would do in that position, all right? If I had a trade that had 4x'd, all right, I would, again, not a financial advisor, not financial advice, do your own research, all that stuff. I would sell a quarter of my position and pull out my cost basis. So no matter what the Fed does, I broke even on the trade, worst case scenario. And then I would let this run a little bit more. I do think the indexes are headed lower in the medium term, probably much lower. So I would leave the other 3/4 of that until it becomes a 5 or a 6 or a 7x, and then sell a little bit more. Sell on the way down, because at some point the Fed is going to pivot, and they are going to turn those printers back on. And when that happens, those calls are going to start heading the other direction. So congratulations on those returns. Thank you for the super chats, and thank you for the clarification also. I hope that helped.
Okay, so we got another one there, Mr. Austin. He talks about the Washington Post reporting that the White House plans to send gas rebate cards. I kind of feel like when we go to the digital central bank, whatever they're going to call it, I think that it's going to come from rationing, either from gasoline or from food. I think that's how it's going to get into our life. So I don't necessarily think that this is too far out there.
No, I don't think it's too far out there. And it's, first of all, thank you so much, Austin. I appreciate the support of the channel, sir, very much. And it's not you. I'm not insulting you, Austin, here, but I'm going to get a little hyperbolic here. This is the dumbest thing I've ever heard. The dumbest thing I've ever heard. And it makes perfect sense coming from this White House. They spend all this time on TV blasting all the profits and the greedy oil companies, and they're making windfall profits and they're price gouging, right? I put out on Twitter today, one of these Bernie bros was talking about how in 2015 oil was this and gasoline was this, and yet in 2022 oil is this and now gasoline is so much higher. It's proof that the oil companies are greedy. And I just remember saying, like, what? So in 2015 the oil company wasn't greedy? Is that what you're saying? Because in order to believe your stupid talking point, you have to believe that the oil companies just suddenly became greedy. No, they've always been greedy. It's just they can charge more now because there's a shortage. That's why they can charge more now. So if you're on TV and you're blasting them about their profits and about how they're raising prices, what do? You lower your taxes? No. Do you allow more production capacity? Say, I don't know, start issuing some freaking leases and some permits to produce more of the stuff? No. No, why not subsidize those higher prices by sending gift cards to everybody? What a brilliant idea. So all they're doing is subsidizing more profits for the oil company, while at the same time they're blasting them on TV, on CNN, for what they're doing. It's the dumbest thing I've ever heard, and it makes perfect sense coming from this administration. It really does. I mean, there's a reason why their polls are what they are. Oh, man. Can't write this stuff, Mish. You can't make this up.
You can't make it up.
All right, so this is a good segue. Thank you very much, Austin. I appreciate this support. And this is kind of like what Mish had just mentioned. Mish, why don't you tell us about the legislation that you were asking me about a minute ago? Because it goes right along with what Austin said.
It does. So they're trying to come up with legislation that helps bring down gas prices and food prices. Well, half of the law is actually a good idea. They're going to put out more or easier loans for startup of slaughterhouses for meat, which is great. More processing plants, all for it. Jobs, get more food out there. The other half, though, they're going to make E85 permanently legal, which I am not necessarily for.
And
I don't think it's a
E85,
good idea.
that's corn in your gas tank, right? That's ethanol.
That is corn in your gas tank. That's the 15% stuff that's really bad for you,
Yeah. And just for
for
you,
your engine.
for folks who don't speak energy all the time, I want to, when you hear E85, I want you to think of all those times you spent trying to start your weed whacker and the thing just wouldn't start. It just sit there and went, even though you just bought the thing last year, it's dead already because of E85. That gummed up carburetor and that dead 4-stroke engine. And it's E85 that did that. And they want more of it. It's great.
Cheeseburger, I know who John Galt is.
You know John Galt? He's an old friend of mine.
Yeah, I know. Me and John Galt are tight. No, Cheeseburger's giving us junk because he doesn't think we know who Atlas Shrugged is.
I've read Ayn Rand. I said I don't have time to read now. That doesn't mean I've never read. Yes, I've read Atlas Shrugged. Mr. Reardon. Thank you, Cheeseburger. I appreciate that super chat, sir. And he says the administration are totally the same as the villains from Atlas Shrugged. Another book you haven't read. No, I've read that one, Matt. Yes, I have, sir. It was a good book. So what was this legislation
driving through the
called
country
again?
here, I've noticed that I'll get to it. This going through most of the country gas stations will advertise that they have no ethanol in their gas, so that is a big deal. And I will look up the name of it if you give me just a second.
I can tell you on our fire trucks, we have to keep cans of True Fuel, which is gasoline that's like 5 times as expensive. We have to buy it 1 gallon at a time just to make sure we don't put any of that ethanol garbage in our chainsaws. And then we find out when we're on top of a roof in a burning building and we need to ventilate and we find out our chainsaw won't start because somebody put E85 in the gas tank. So we have to spend like $20 a gallon for True Fuel to make sure our equipment on the fire engine will work when we need it and that there's none of that ethanol crap in there. And by the way, the whole point of this legislation, what was it called? Affordable Food and Fuel?
No, it's Lower Food and Fuel Cost Act.
The Lower Food and Fuel Cost Act, right? And remember, every time the government says they're going to make something more affordable, you need to be worried because everything they've ever made more affordable, like housing, health care, college, has gotten ungodly more expensive. So how are they going to make food and fuel more affordable? By putting more food in your fuel tank. That's how they're going to lower gas prices. And you know what? Nobody said it better. And who was it? David Morgan put this out on Twitter today. I love this tweet. I got to shrink my melon a little bit more so you can see this. And there's Jeff Borgen, as the economic ninja would say, saying using more ethanol.
Hold on just a second, Jack.
What do you got?
We're calling it E85. It's actually called E15. We're doing it backwards.
It's 15%.
Just want to make sure we get the wording right.
Yeah,
it's 15% ethanol. So I think we're trying to say E15.
Either way, it's corn in your gas tank. And, you know, here's Jeff Borgen, and he's saying using more ethanol will help bring down fuel prices. And you've got the lady saying, my God, look at the price of corn. You wonder why corn prices are going higher? Maybe because we're putting in our gas tank when we're sitting on top of an ocean of oil and gas in this country. Let's bring it out of the ground. All right. Now, where were we? Oh, man, I got another one here. You guys are awesome today. Thank you so much, guys. Really appreciate the support of the channel. I got AK is back, and he says, look at the Economist magazine cover all down the rabbit hole. Probably why decentralized finance was always going to fail. Economist cover called Down the Rabbit Hole. All right, we're going to bring that up real quick. Let's see what we can find. Economist Down the Rabbit Hole. You struck my curiosity, AK. Here we go. Here's the image he's talking about. Ah. You guys probably can't see. I got to shrink my melon a little more. There's Alice. Follow the white rabbit, Mish. And there's Ethereum. There's Bitcoin. I don't know. I'm sure we got Litecoin, a couple of other ones, all jumping down into the pit. The promise and perils of decentralized finance. And, you know, I was saying it all day in my video today. All decentralized finance is its debt. It's an extension of the debt market. They borrow cryptocurrency, and they pay a ridiculously high yield, And then they take that cryptocurrency and they use it to buy something even riskier to get an even higher yield for themselves. And then the difference is how they make money. We have a term for that, for an organization that borrows money at interest and then lends money at high interest for a profit. And the term for that is bank. DeFi are crypto.
Oh, I was thinking
banks.
loan sharking.
Well, loan sharks are just banks run by amateur criminals, not the professional criminals that run our banks.
Okay.
I mentioned in my video today, it's, whereas the banks are run by these elitist, globalist crooks, DeFi is just run by amateurs and a-holes. I use the term, they do it in a V-neck instead of a suit. And then, that was just kind of like an off-the-cuff comment that somehow made it through editing. I went and I Googled crypto billionaire V-neck. I couldn't find a single picture of a crypto billionaire in a V-neck. Whoops. But yeah, I've been saying all along in this channel, I don't trust DeFi. I don't trust yields like that. There's something wrong with them. The principal, if you're getting a yield that high, it means your principal's not safe. Just like that Chinese debt, the Evergrande debt, the reason the yield is so high is because people don't trust them. But thank you very much, AK. I really appreciate the super chats today, guys. You guys are awesome. Thank you so much. Now,
hey, you want to check the markets? Looks like we're coming down to zeros.
Oh yeah, I have not been through the indexes. Let's see. S&P right now is still up 11 points, clinging to positive territory, 1/3% for the day. The Dow is at, can you guys see? Yeah, you can see. The Dow is at, in the negative. Dow is down 5. I just mentioned the Dow should not be leading the way lower. It should be the NASDAQ leading the way lower, and the NASDAQ still up over 156 points. So is somebody selling dividend aristocrats in the Dow and using them to buy what, like Teladoc, to buy like ARK Invest crap? Is that what's going on in the markets right now? I don't trust it. Does not pass the sniff test. This is a really bad way to end the week. The market is not learning its lesson of the last couple of days. And bond yields right now, the 10-year is down 7 basis points, 3.23. Does not pass the sniff test. Gold down 0.5%, 9.75. Silver down 1.4, 30 cents. Oil still way lower, now down $8.48, 7.2%. Don't trust it. I don't trust this move in crude. I think crude is on sale right now, although my call options in the oil ETFs are getting clobbered right now. I did not add to them this week. I probably should have. I'll be looking to do that early next week.
Well, Miss Princess Consuela Jose Ortez Banana Hammock wants to know how many nuclear power plants would it take to replace the Hoover Dam. Ironically, one.
Hoover Dam's got to be more than 1,000 megawatts. Let's see. Hoover Dam megawatts. I don't know the megawatts of the Hoover Dam. 2,000 megawatts. Yeah. A single dual unit nuclear site would replace the Hoover Dam's power. Very good, Mish.
Mm-hmm.
All right.
So I think if we were going to build one, though, we'd build a multiple, do a 4 or 5 unit thing, and boom, you got 2 Hoover Dams done. If you're going to do it right.
Yeah, well, the Hoover Dam is going to have to be replaced, or at least that water is, because Lake Mead is drying up real fast.
Well, the biggest plan right now is they're going to move the Lake Powell down to Lake Mead.
Just drain one into the other.
And just give up on Lake Powell and then give Lake Mead another year.
Which, if you're a farmer who draws from Lake Powell, good luck to you, I guess, is what they're saying. Because I'm sure somebody's
do you know what Biden's doing in... Yeah, no doubt, the dead bodies. Do you know what Biden's doing in Saudi right now?
Apologizing for calling them a pariah state, maybe?
Maybe.
I don't know. Does Biden know what Biden's doing in Saudi Arabia right now?
Well, I'm sure the handlers do.
No, I haven't heard a lot about his trip. Although oil is down, I'm sure he's just begging them to pump more. But Saudi Arabia has been warning us that they can't pump more. That they want to pump more, but they can't because of the underinvestment.
Right. So Kevin's asking, do we think we'll trade lower until Biden and the Prince actually meet and talk? I think it's all about expectation, and we talked about how that a lot of speculations leaving the market and knee-jerk reactions at this point.
I've got Aaron Livy is asking me, can I look into Hex, which is a crypto? Is it a Ponzi or legit? Um, Aaron, I can't make a call like that on the fly to really look into a cryptocurrency to see if it's legit or not. You know, you'd have to look into the guys that wrote the code, the people that run it. Is it decentralized? Is it decentralized? How does it work? Is it just another unnecessary Bitcoin clone, or does it have some other utility? Is it part of some algorithmic stablecoin nonsense? There's so many variables and so many different things that can go wrong. I just can't make a call like that on the fly. But I can tell you, I don't get mixed up in altcoins for that reason. There's too many things that can go wrong. Bitcoin has survived 3 crashes and come back stronger every time. That's why I stick to Bitcoin. Ethereum has done the same. So I am less enthusiastic about Ethereum, mainly because of this big transition to proof of stake that Ethereum is making right now. That could go very well or it could go horribly wrong. I don't know. But coincidentally, I switched off my Ethereum miner because the power prices are now more than the payouts for mining Ethereum. So that doesn't bode well for the Ethereum network. If the miners are going down, the network's getting less secure, although that will drive the payouts higher for the miners who stay on. But the power here in PA, too expensive to profitably mine Ethereum right now. So Hex, I can't make a call one way or another on that particular coin, but I can tell you I'm not going anywhere near that coin. I only touch Bitcoin right now because Bitcoin's got a proven track record. A lot of these other coins like Solana, Litecoin, I don't think they'll be here 10 years from now. I really don't. Certainly not the dog coin, Sheep, Doge. I don't think they'll be here. Maybe Doge will, having Elon backing it, that the richest man in the world. That's
you got to have a backer. You've got to have somebody kind of putting money into it for you. So if you don't, what's going to keep you here in 2 weeks? When is that? Or sorry, 2 weeks, 2 years. When's this halving cycle over?
May of
you said June of
2024.
Okay, that's when we're going to know what's going to be here.
Now I should add that that's not a switch when the halving happens. Just that most of Bitcoin's gains historically come within 18 months of a halving. Within a year and a half of a halving is when you get these monster bull runs, and then they crash hard afterwards until the next halving. 2024 is the next time. And by the way, on Doge, like if your coin started as a joke to prove that people will invest in anything, don't invest in that. It's probably your first
there's
indicator.
a couple coins like that. Yeah.
All right. Now, Mish, we were talking a lot about the ethanol and the gas. Now, this story has been developing for a while. I think we got to talk about this one because I don't know if we're at a peak, if we're at a turning point, or if we're just pausing here. But for 2 weeks in a row now, most fertilizer prices have been a little bit lower. All right. Now, we spent a lot of time talking about fertilizer on this channel, and we haven't talked about it a lot lately. This needs to be mentioned.
It's a supply and demand thing. I think, most of the corn planting, if you look at the states that plant corn, are done.
Yep.
I think that once you start looking at that, the price should come down. But I think what we're seeing is that demand destruction is not what we need it to be to start for the next cycle.
Well,
we should see a huge down, and we're not seeing it.
We've also had supply destruction, too. The European plants have still not come back online because their power prices in Europe haven't come down. So we need more demand destruction, which, unfortunately, with fertilizer demand destruction, that means less food. But I just want to read a little bit out of this article here. Retail prices tracked by DTN for the first week of June show the price of most fertilizers continue to be lower compared to months prior. This marks the second consecutive week most prices are lower after 19 months of mainly higher prices. 7 of the 8 major fertilizer prices were lower than the last month, but none were down a substantial amount, which means 5% or more. Now, this red line on this chart here is your 2022 fertilizer prices. And you can see they've obviously leveled off, and you can just barely register that tick down. I mean, if we zoom in here, this is anhydrous ammonia prices you're looking at right now, just barely down. All right, these things are trading flat. But the important thing to notice here is that they've leveled off after this monster run through the fall and into the winter. They're starting to level off now. What were you going to say, Mish?
What I was going to say is that fall, it should be a fall. It shouldn't be a level.
Yes.
Sorry, I have that backwards.
Yeah, I mean,
It shouldn't be a
you
level.
can
It
see in
should be a fall.
2022 we were trending down around this time of year. It's hard to register after the chart from 2021 messed up the curve. But the reason I mention that is because I've been following the corn trade pretty closely here on this channel. And the corn trade, I'm still in it. I'm still long corn. I have August call options in corn, and I have January of 2023 call options in corn. And I've been taking profits on the way up, so I'm still way in the black on this trade overall. But the options I'm currently holding are down significantly from where I bought them at. And I was looking at this chart today, trying to figure out what we've got going on, at least in the technicals. Let me move this over a little bit more so you guys can see. And there's a couple of things I'm watching technically here. Number one, the 50-day moving average on this ETF. All right, we broke below it. We came up and we failed to break back above a couple of times. We did break back above earlier this week, and now we're back below it. So if the 50-day moving average continues to act as resistance, majorly bearish indicator for corn. All right, so that's one thing I'm keeping an eye on. The other thing I'm keeping an eye on is this declining trend in the RSI, or the relative strength index. That's a measure of the momentum that a move has. And the fact that RSI was making consistently lower highs told me this trade might have been running out of steam, and that kind of could foreshadow this decline in the price trend. Now, we've broken out of that downward line here, but we're still kind of leveling off. I want to see RSI make a new high. I want to see it get above this 58 level on corn to mark an end of this downtrend. And the other thing I've noticed is that we've had a bullish cross in the MACD, or this trend, another indicator of momentum and the strength of a move. That's to the bullish side. So we've got some bullish indicators in the RSI. We've got some bullish indicators in the MACD. We've got a little bit of a bearish indicator in this 50-day moving average acting as resistance. We're kind of at this inflection point in the corn trade. All right, now there's a couple of other stories going on that I want to mention here. First one here, this came just today, that the U.S. corn can stomach hot weather, but not through July. See, we've got this big heat wave. Salud, Mish. Salud. So
Sorry about that.
We've got this big heat wave coming through. Right now, hot, dry weather, bad for corn. All right, we wanted warmer, drier weather during the planting season, and we never really got it. They've managed to get some of the corn in the ground. Right now, we've got this heat wave, not good for corn's development. Now, we're okay right now if this heat breaks. Unfortunately, they're not calling for a break in this heat until early July right now. And if this ridge that's over the corn belt, that's baking corn country right now, if it stays well into July, that's going to have a big downward pressure on corn yields. So you got to watch that weather. Look for a break in the heat wave. If we see in the weather, they're calling for a break in this heat wave 2 weeks out or 3 weeks out. If we see that in the next couple of days, corn's probably going to head lower from there. If we don't get that, corn is going to continue to tick higher. All right, and here real quick.
Yeah, so what you start looking at is you start looking at yields. There's curves, right? For every day you're late, there's a percentage of yield you lose. And then for every day of heat in the first 2 weeks of July and drought, there's yield you lose. And those first 2 weeks in July are the most important.
Yeah, that's when
yield.
It's in its pollination or its silking stage. And if you get severe heat during that silking stage, you end up with a condition called tip back, which if you've ever opened up an ear of corn and the end of the ear has no corn on it, it's just like, it almost looks like bugs have eaten it. That's where it failed to pollinate at the end. That's where that heat in early July can really affect your yield. And you can see here in this video in the Weather Channel, I'm not going to play the whole video, but you can see this well hotter than average right in the southern and western corn belt here. This is where they're baking. If this stays here, and this ridge is stubborn, it's just sitting there, it's not moving. They need this to move in the next week or two in order to get any kind of hope for higher yields this summer. If it doesn't move soon, it means yields are going to come down. Now, that's bullish for corn prices. Now I have to mention something that's bearish for corn prices. Again, we're at this inflection point. IHS is one of these private data acquisition companies, and they just came out and they said they're raising their corn acreage forecast and cutting soybean forecast. Now, this flies in the face of what the USDA said in their March report about prospective plantings. In the March report from the USDA, they said the opposite. And if you remember, I did that interview with Joe Vaclavic. I hope I said your name right, Joe. I'm sorry if I got it wrong. Or Vaclavic from grain markets and other stuff. And he mentioned that he thinks some of those corn acres may have come back because of the higher corn prices, where originally the fertilizer prices had scared people out of the corn market, that the higher prices in the finished corn may have brought them back in. And this IHS report kind of lends some credibility to what Joe was saying. I just want to read a little bit here. Private analytics firm IHS Market Agribusiness on Wednesday raised its estimate of U.S. corn plantings to 90.965 million acres, according to Reuters, up 455,000 acres from its forecast in late May. All right, so what they're saying here, higher prices convinced the farmers to plant more corn, where previously the story was less corn because of the fertilizer. So there's some bullish and there's some bearish forces at work in the corn markets right now. I'm still in this trade, but I'm watching. If I see this weather break and we get cooler weather for early July, I'm probably going to be looking to exit that corn trade. Vice versa, if it looks like that hot weather is going to stay there well into early July, I'm going to stay in that trade a little longer. So I just wanted to give you guys that update. I know a lot of you guys have been watching that one closely. I got a couple of super chats here I missed. I've got Mike Bender from Robin RC Models. I didn't get his name wrong this time. He said, looked at dealer options positioning on Thursday. High skew implies fatter left tail plus higher chance of higher levels of implied volatility and a further sell-off. What underlying asset are we talking about here, Mike, with the dealer options positioning? Fatter left tail. Are we talking about in the bond market? We talking about the primary dealers, or are we talking about swap dealers in gold and silver right now?
Move on to the next one. I will look it up.
Keep an eye out for Mike clarifying in that one.
Yep.
So I see, and then I've got Mike Kathman. Thank you very much for the super chat, Mike. He says, so I see where Europe is going all in on solar plus Biden, which should help my silver. Yeah, I know it tracks gold, but my fellow ape, we good. Yeah, I think silver's good in the long run. All right, remember precious metals, when the big sell-off and the margin calls hit, everything is going to sell off, including precious metals. Now, I think heavy investment in solar is very good for gold and silver. Not because I think the solar panels are going to use so much silver. No, I think it's good for gold and silver because the more we keep up this delusional, ignorant fantasy that we can power a modern industrialized society with solar panels, the more doomed we all become, and therefore the more valuable gold and silver would get, because in the Thunderdome, as Chris Taylor would say, gold and silver will be priceless commodities. So I don't have the bullish case that like the Green New Deal is going to send silver higher because AOC is going to buy all the silver to make solar panels. But I think the longer these idiots are dictating energy policy, the less energy there's going to be and the more doomed the global economy is. Therefore, gold and silver as a safe haven asset would probably outperform. So I get to the same place as you, just by a much different road, Mike. Thank you very much for the super chat. What's going on?
Yeah, he's talking about the SPX.
Talking about the SPX. Okay, let me go back to Mike's channel in the context of the S&P. He says, looking at dealer options positioning on Thursday, high skew implies a fatter left tail and a higher chance of levels of implied volatility and a further sell-off. So you're saying we're probably looking at a higher VIX. And, you know, I haven't looked at the VIX right now. And thank you, Mike, for your super chat and your support of the channel. Now, on the VIX, where is it? I'll just type out volatility if you insist. Where is the CBOE VIX?
And while he's looking at that up, I had a couple people ask about the cattle heat. Yeah, you know, that it happens every year, but it hasn't happened to the volume that it happened this week. 10,000 cattle dying at once is a big deal. Usually you're talking about 1,000 head. So 10,000 head to drop at once is a big deal. And the farmer loses out, not the slaughterhouse.
So, yeah, on the subject of the cows, and we'll get back to the VIX in a second, Mike, I've gotten a lot of messages about the cows. I don't really think it's a needle mover. I think it's people are just very, like, hyper vigilant for anything in the food supply chain right now because of all the other stories going on. And I think it's probably getting more attention than it might otherwise. Keep in mind, the problem with meat prices is the bottleneck at the packing plants. It's not that we don't have enough cows. So even with this 10,000 cows dying, it might actually help the cattle farmer a little bit. Not the farmer that owned those particular cows, but it might help the cattle ranchers a little bit, but it's not going to have any effect on the supermarket because the price in the supermarket is being limited by how much cattle they can process through those packers. And right now there's more cows than there is capacity to process them. And that's why the U.S. cattle herd has been shrinking for the last couple of years. So unfortunate story, and it's tough for those farmers. I don't think it's a needle mover in the long run, though.
I agree. When you're talking about millions of head, I mean, you're talking 5 million pounds of meat, which, don't get me wrong, that's a lot of meat. But on a weekly basis, it doesn't really move the needle.
Now, on to what Mike Robin was saying. Mike Bender, there it is. I always call him Mike Robin at least once in a stream. Sorry, Mike Bender. I apologize. So here's looking at what the VIX is doing right now. And you mentioned the higher implied volatility in the options on Thursday, and that you think it's going to mean higher vol in future sell-offs. I just want to draw a little bit on this chart here. I hope I don't butcher this. Bear with me here for a second, folks, because 36 has kind of been the limit. People have been, the sell-offs have been limited to 36 on the VIX. That's typically where the vol sellers have come in and these rallies have stalled. But you notice this increasing lows in the volatility, and we actually had a step higher and a relatively increasing highs, or at least an increasing average. We're in this upward channel in volatility. And, we've stalled a couple of times around this 36 level. Sooner or later, we're going to break above. And, I was talking this over with Devin Brines on Twitter a little bit. I think that's going to be the calling card of when this sell-off is for real or not, is when we get a close in the VIX sustained above this 36 level, above this ascending line. That's another indicator that something has changed, that we're not just in this downward channel, that we're about to steepen this sell-off a little bit. Maybe an indicator that the margin calls are finally happening. Because every time we've gotten around this 36 level, the volatility sellers have come in and beaten the prices right back down, and the market has recovered. So I agree with what you're saying, that the implied volatility that it's going to be higher in the next sell-off. We're in this trend of increasing volatility. So yes, I'm seeing the same thing. I'm getting there differently. I'm not taking the same route you're getting there, much the same way as with Mike Kathman's comment. But thank you very much, Mike. I appreciate that very much. All right, guys.
Nicole asks. Hey, go ahead.
All right, real quick, and then Nicole, because we're getting kind of long in the tooth here. Bank of Japan. I just want to touch on this one.
Oh yeah.
Oh my God. What are they doing in Japan? I heard them calling it Operation Ostrich on Twitter. Somebody called it that, head in the sand. They are engaged in full-blown yield curve control in Japan. They are printing as much yen as it possibly takes to maintain their 10-year yield at 0.25%. Right? So they're not doing quantitative easing, which is where they say we're going to print so many yen per month and use it to buy bonds. They're in full-on yield curve control that says they will print as much yen as necessary to make sure that bond doesn't go over 0.25%. Now, the reason I highlight this is because look at what the Japanese 10-year yield just did. Hey, Mish, does that look like 0.25% to you?
It did not. In fact, I think I texted you last night and said this is imploding.
It did. And
what did I say earlier? It looks like they cut their foot off and then shot it.
That would be like cutting their foot off and then shooting it. That's what Japan is doing to themselves. Mish sent me a text last night right around here, and I was dead last night. I tried to follow up on it, Mish, but my eyelids lost that war, unfortunately. And that was this spike. Last night, the yields on the Japanese 10-year became detached from that 25 basis point peg, and they spiked. Now, the Bank of Japan was able to come in and suppress them back down. But here we are right now at 0.31. Again, the Bank of Japan is losing control. You've got, I don't know if you've ever heard the term bond vigilantes, which is people who are just dumping Japanese government bonds because they don't want to play in a rigged market with the Bank of Japan. That's driving those yields higher. And, well, the Bank of Japan is coming in and trying to drive those yields lower by printing more yen and buying them up. And right now, the Bank of Japan is losing, which means very slowly the central bank is monetizing all the debt. If this keeps up, this ends with the Bank of Japan owning all of the government debt. That's where this goes. And it also ends with the Japanese yen being almost worthless, because this is inflationary. And look at what the yen has done against the dollar. A yen is right now 0.74 cents and falling. Japanese yen just continues to fall because they're debasing their currency to maintain yield curve control right now. It's not going to end well for Japan. It's not going to end well for the average Japanese citizen. All right, Mish, we were getting there was a question from
Nicole. Nicole knows who she is. So if you have to take a weapon, you feel, to go get food download from Walmart or anywhere else, you might want to have already gotten your rice at home.
I see where we say,
Just gonna
hypothetical
put that
for
out
you.
there.
When the
Yeah.
food riots shut down food distribution and Walmart institutes curbside pickup only, how do you avoid being a rolling MRE?
Yeah. So if people are going to attack you to get your food that you just picked up, you probably should already have your stuff at home.
That's why lead is not too far from gold and silver on the periodic table for a reason.
That's true. Thinly coated lead, or thinly coated lead with copper. Thinly coated lead. Yeah.
I remain bullish on lead, and no, I am not talking about the futures.
I am you know what I believe in.
Yep. But you know what? We're not waiting for that situation, are we? Miranda Velacruz de la Hoya Cardinal. Oh, I'm sorry. Princess Consuela Banana Hammock. Yeah. Miranda Veracruz de la Hoya Cardinal. That was the reporter from Married with Children. I'm a child of the 80s, after all. Anyways, that's why we're not waiting for that to happen. We're stocking up on our non-perishable food now when we go to the supermarket, right? We're getting a little bit more than we need, non-perishable. We're paying attention to shelf life, and we're setting it aside, right? It's also probably going to be the best performing asset class this year is non-perishable food. Not kidding. Not kidding. It was a used car.
And don't forget your Army surplus stores. They have actual MREs.
You know, MREs actually, I'm going to say it, they're not the best, the shelf life on those MREs. I mean, they have a 5-year inspection term, right? Nobody really knows what the shelf life of an MRE
Well,
is.
if you get the legitimate ones, they can go for 15.
Yeah, but they're also really expensive too, right? You know, the beans and the rice that we did that video on, you throw those in a Mylar bag in a 5-gallon bucket with an O2 absorber in them, and you store them in a cool, dry place. You're talking 25, 30-year shelf life on those things. And it's a lot cheaper, a lot more meals, a lot more calories and protein than an MRE. But it doesn't have the Tabasco sauce.
That's true. And it didn't have the gum either.
Yeah. All right, guys. I think we're getting a little long in the tooth here. It is now 4:18. We've been going for a full hour. I want to thank the moderator, Mish, for stopping by for us, for sneezing into the microphone. Thank you very much for that, Mish. And
yeah, no problem. At least once a stream.
Yeah. And I want to thank everybody for your super chats. Thank you to my Patreon supporters, guys. I couldn't do this without all of you. And also, there's a link down below to my Patreon. We're doing something on our Wednesday Patreon meeting. It was Keenan Haywood's idea. I have to mention it. Basically, kind of like name your scenario that causes the big one. What will be the straw that breaks the camel's back? Will it be some bank, some geopolitical event, some other financial crisis? Everybody's coming with their own scenario on Wednesday to see just hypothetical, like, end of the financial world scenario. See who gets it right. I have mine already. I know what my scenario is. And if you've been watching this channel, you could probably figure it out. Anyways, guys, link down in the description if you want to check that out. Remember, guys, harder times coming. They're not here yet. So enjoy this long weekend. Have some good times. And Mish, anything you want to add?
Yeah. Make sure you spay and neuter your pets.
Thank you, Bob. All right, guys. Until next time, live small and dream big.
We good?
We good.